Love can be found anywhere, maybe in the grocery store, maybe at the nightclub, but most likely it's going to be found on an app on your phone. Welcome to 2020, where it's never been easier to go on a date. And did you know you can invest in the biggest dating app of them all? Yep, you can invest in Tinder. For those of you who are new, welcome to my channel. My channel is all about investments that anyone in the world can make. And what I'm really trying to do is change how most investors think, especially about the stock market. And I'm sure people spend far more time swiping left and right on Tinder than they do thinking about their investments. So let me help you analyze the company that owns Tinder, that is matchgroup Inc. Now, I don't think I need to go into my personal opinion of Tinder. Well, what am I talking about? Of course I can. I'm on YouTube. I can say whatever I want. So here's my opinion of Tinder. Well, at first, I thought Tinder was kind of stupid and lame, and I didn't think online dating was really a thing. I thought it was for losers and it wasn't natural at all. It also felt a little bit strange for me to decide if you like or don't like someone just based on a photo. So early on, I thought it was for people who lacked confidence and were struggling to meet someone in the real world. But I did have fun looking at Tinder on my friends' phones. I saw it as a bit of a game, and I could understand sort of the childish nature of it. But as more and more people started using it, I started to realize a few things. People were meeting with strangers that they never would normally meet. From different cities to different countries, people were meeting with strangers that had totally different hobbies to their usual circle of friends. And some people were actually starting to meet some really cool, awesome people on the app. So in my head, initially, I always thought there was this stigma attached to Tinder. See, I always believed that a man should go up to a man or the woman that he's interested in and just introduce himself in real life. Now, of course, I still think that works, but for millions of people, Tinder offers a higher level of comfort. And this is obviously very popular. Subscribers have grown every year up to a massive 57 million users. I think everyone would agree that there's just times where you're out and you're just not in the mood to meet anyone. Maybe we're really busy, or we're stressed, or we're just sick of getting hit on all the time. That's a big problem for me. But Tinder gives both people the opportunity to agree that they're interested in meeting somebody new. It is a brilliant idea, and it has totally revolutionized the dating industry. Before Tinder, online dating was seen as maybe a little bit desperate, but Tinder has definitely changed the game here. It's definitely reduced the stigma attached to online dating. Tinder just made it far easier and more fun to find somebody to go on a date with, and I don't think that dating is ever going to stop. Let's look at some stats about Tinder. There are 57 million users. 6 million users actually use Tinder Premium, so that's about 1 in 10. And there's 1.6 billion swipes per day. And it also makes $80 million in revenue a month. That's a pretty successful app. Tinder generates about 56% of the revenue for Matchgroup Inc., and the remaining revenue is generated from these sites: Match.com, OkCupid, Plenty of Fish, Hinge, and others. Matchgroup own 3 of the 4 biggest dating apps, so they are the dominant business in the online dating world. But I think the big question needs to be asked, will it be going strong in 20 years' time? Now, this is actually where I'm starting to have concerns. See, clearly Tinder is the biggest dating app out there, but I'm a little bit worried about the future competition. See, the barrier for competition entering the marketplace is low compared to a lot of other industries. See, what we're looking for is some sort of competitive advantage that Tinder has over the other dating apps, or that maybe one of the other Matchgroup Inc. properties has in the marketplace. For reference, Coca-Cola has a competitive advantage. It tastes unique. Sometimes people just feel like a Coke, and it has been proven to work for decades. McDonald's is another example. I know they have a lot of competition like KFC and Burger King, but they have so many prime locations. And this gives them a really big competitive advantage because it's not like anyone in the world can just start a gigantic fast food empire. But for Tinder, it's relatively simple to make a dating app, and people from anywhere in the world can do it. And then compare that to formulating a new drink that's better than Coca-Cola or competing with McDonald's. It's a lot less barrier to entry. And I would say that it's going to be very easy for a better dating app to come along and take market share away from Tinder. I actually don't think there's much brand loyalty around Tinder either. Now, Facebook, for example, say 7 or 8 years ago, they saw a threat in Instagram, and they had enough money and they were big enough by that stage that they could just purchase Instagram and add it to its portfolio. Now, I think Match Group are going to have to do something very similar. So if they see any competitive apps coming along that could be stealing market share from them in the future, well, they're going to have to try to buy them as quickly as they can. But it is also likely that a new app comes along and starts stealing market share and doesn't sell to matchgroup.com, and they maybe get crushed by this new app. I'm not sure. I think both realities are possible. That makes it very hard for me to invest. They would have to give me a really big margin of safety before I'd feel really confident with the investment. But maybe they will be able to buy all those threats that come along with their big pile of cash. I don't know. And of course, I want to go over their finances to see if they're a strong company financially. Sit back and don't worry about the terminology. Just get a feel for what I'm talking about. I'm going to first look at their debt situation, then I'm going to see if they're growing, and then finally I'm going to see if they're a well-managed company. It's really important to look at the company's debt because if the business was to completely stop, let's say the Apple store was hacked or that Apple decided to just kick Tinder off the App Store completely, well, we want to make sure that they can survive this period. Because if their revenue got completely slashed, we want to make sure that they don't have all of this debt that they have to pay off and maybe they go bankrupt. So to see if the business can handle its debt, I went through the debt to equity ratio and the current ratio of the business. And I found for Match that they are in a weak debt position because of their debt to equity. This is weak because I want to see a number under 0.7 and theirs is 5. But the current ratio, it is above 1.5, which is good in the short term. They can pay off their short-term debts. So when we see the current ratio okay, but the long-term debt in a bad situation, it generally means that the company is taking out a lot of long-term debt so they can grow aggressively. And this really clearly shows that Match is highly leveraged and in a high growth phase of the company. Lots of new companies take out lots of debt to grow and get big fast. Of course, being highly leveraged can be great to achieve their goals, but it also means if things go wrong, well, then the whole company is in trouble. I don't generally like investments like this unless the margin of safety is really big. But high growth companies actually attract a lot of attention, so the share price might be overinflated. That's generally the case. We'll have to wait and see a little bit later. Are they growing? Now, considering Match is highly leveraged, we definitely want to see strong growth. I prefer consistent growth without a lot of debt, but for those of you with a higher risk appetite than me, well, let's go take a look. So to check for growth, I look at the book value per share, the earnings per share, and the operating cash flow. Luckily for Match, they are definitely growing. So all that debt that they have, well, they are using it to grow, and that's evident with their operating cash. But as you can see here, the book value per share has been declining. This is simply because they have been getting more long-term debt, typical of a leveraged growth company. But growth is definitely happening, so we can give it a tick. Is the company well managed? Now, we obviously can't just go and have a meeting with the people who run Match Group Inc., but there are some telltale signs in the financials to show that they're doing a good job or not. So I check for the return on equity, the free cash flow, and if they have a dividend. And I found for Match that the company is, I guess, well managed, but it's probably just too early to tell. See, return on equity is huge at 192%, but this is not a good measure because all of this debt is skewing the results. I would give them a maybe because we can't really tell accurately. On one hand, they've been able to grow and monetize Tinder very successfully, but on the other hand, they have a lot of debt, hoping that they get a lot bigger in the future, which could mean they crash and burn. And of course, they don't have a dividend because they're keeping all that money so that they can grow aggressively. And honestly, this is very typical of a young company trying to turn into a really big company. Now, to find intrinsic value, it's really not easy with a high growth company. My calculator, which you can get free in the description below, it can do it, but to predict future growth rates, it is pretty tough. I mean, with like a stable, established company, when we look at the growth rates for the future, we're probably going to be somewhere in the ballpark. But with a high growth company, it's very difficult to get right, and there's going to be big differences in opinions. Look, I'm going to take my best guess, but it's going to probably be far from accurate. If none of this makes sense to you, I've made a tutorial on how to find intrinsic value, and there's a link in the description below. The analysts have averaged actually 18% growth rate over the next 5 years, but I use 15%, so I just wanted to be a little bit more conservative. So here are what I think would be decent prices to buy this stock at, and it is early June 2020, and the stock price at the moment is about $85, so it's nowhere near these prices. Look, if you think more strongly about the prospects of this company than me, then you're going to have a different opinion and maybe stronger growth rates, but honestly, I think this is just far too overvalued for anybody. So do I think Match Group Inc. is a good investment? So to summarize, I think Match Group Inc. doesn't really have any protection, say like a McDonald's or a Coca-Cola in their space, and the opportunity for a competitor to come in and take a big market share is quite high. And they're also very heavily leveraged, so if things go wrong at any stage, they could be in trouble. And at their current price, I think it's just filled with speculative buyers driving the price up. And before we go, I'm going to do something that is a bit different on this channel, and I'm going to do a Q&A. And the question that I'm going to answer today is, why are prices that are listed on the share market, why are they so far away from fair value all the time? Firstly, this was a great question, and secondly, it's a very complicated answer. See, there are millions of investors all over the world, all trying to do, say, slightly different things. Some people are doing technical analysis, some people are speculating, some people are buying on rumor, some people are very emotional, some people are value investors like me, some people are just investing because their neighbor or their brother told them they should invest. So for every one value investor who understands that they need to break down the company and understand what it's truly worth, there's 10 or 15 or 20 other investors out there in the world who have no idea what they're doing, and they're putting money into companies that they just hope will be really good in the future. So over the short term, that's why we see like big price moves as up and down, and in the short term, you really have no idea what's going on. But in the really long term, like that 5, 10, 20-year period, the market and the particular companies really do start to level out and sort of find the value that they should be. Remember, if you want the intrinsic value calculator that I use, it's free and it's in the description below. Please also subscribe to my channel, and I will see you in the next video.